Taxes. A word that often brings a sense of dread and confusion. But it doesn't have to be that way. The lifeblood of any government. We all pay them, contributing to the infrastructure and services we rely on daily. But some pay much less than others. This disparity often raises questions and eyebrows. How do they manage to do it? They understand the tax game, a game with rules that can be mastered. The basic principle is simple. The government taxes your income. The more you earn, the more you pay. The less taxable income you have, the less tax you owe. Seems straightforward, right? But there's more to it. The tax code is complex, filled with nuances and intricacies that can be overwhelming. It's full of deductions, credits and exemptions, legal ways to reduce your taxable income. These are the tools in your tax toolkit. The rich understand these rules. They invest time and resources to learn and apply them effectively. They use them to their advantage, ensuring they keep more of their hard-earned money. The good news, you can too. With the right knowledge and tools, you can navigate the tax system effectively. It's not about cheating the system. It's about understanding the rules and using them to your benefit. It's about playing the game smart. Just like the rich do, you can strategize and plan, just like the rich do. With the right approach, you too can master the basics and beyond. The rich don't avoid taxes illegally. They do it legally. They leverage the tax code to their advantage, using every available provision to minimize their tax liability. This isn't about evasion. It's about smart, strategic planning. They hire smart accountants and tax attorneys. These professionals are well versed in the intricacies of tax law and stay updated on the latest changes and loopholes. Their expertise is crucial in crafting effective tax strategies. These experts navigate the complex tax code. They understand the nuances and can identify opportunities that might be missed by the average taxpayer. Their role is to ensure that every possible legal advantage is utilized. They find every legal way to reduce their client's tax burden. This involves a deep dive into financial records, identifying potential deductions, credits, and other tax-saving opportunities. One strategy is maximizing deductions. Deductions can significantly lower taxable income, which in turn reduces the amount of tax owed. This can include business expenses, charitable donations, and more. Deductions are expenses that can be subtracted from your income. By carefully documenting and claiming these expenses, the wealthy can reduce their taxable income substantially. This lowers your taxable income, reducing your tax bill. The lower the taxable income, the less tax you have to pay, which is a key goal in tax planning. Another strategy is utilizing tax credits. Unlike deductions, which reduce income, credits reduce the tax owed directly. This makes them incredibly valuable. Credits directly reduce your tax liability, dollar for dollar. This means that a $1,000 tax credit saves you $1,000 in taxes, making them more impactful than deductions. They're more valuable than deductions. Then there's asset protection. This involves setting up legal structures to protect wealth from taxes and other liabilities. The wealthy use trusts, foundations, and other legal entities. These tools help manage and protect assets, ensuring they are passed on to future generations with minimal tax impact. These structures shield their assets from taxes and lawsuits. By using these strategies, the wealthy can legally minimize their tax burden and protect their wealth for the long term. Let's get specific. What deductions can you use? Plenty. Homeowners can deduct mortgage interest and property taxes. Business owners can deduct business expenses. There are deductions for student loan interest, medical expenses, and charitable contributions. The list goes on. Tax credits are equally powerful. The Earned Income Tax Credit helps low to moderate income workers. The Child Tax Credit assists families with children. Education credits offset the cost of higher education. By taking advantage of these deductions and credits, you legally reduce your taxable income, just like the rich. The wealthy don't just focus on reducing income tax. They protect their assets from estate taxes and lawsuits. This is where trusts come in. A trust is a legal entity that holds assets for beneficiaries. Trusts can help avoid estate taxes, protect assets from creditors, and control how your wealth is distributed. Other asset protection strategies include forming limited liability companies, LLCs, and family limited partnerships, FLPs. These structures provide legal protection and tax benefits. Section 5. Real-world examples: how the rich play the tax game. In this section, we will delve into the sophisticated strategies that the wealthy employ to minimize their tax liabilities. These methods are not just theoretical, they are actively used by some of the most successful individuals and businesses around the globe. Let's look at some real-world examples. These examples will illustrate how the rich navigate the complex tax landscape to their advantage. From real estate to tech, the strategies vary, but the goal remains the same: to legally reduce the amount of taxes they owe. Real estate moguls often use depreciation to reduce their tax burden. Depreciation is a non-cash expense that allows property owners to deduct the cost of their properties over time, even as those properties may be appreciating in value. Depreciation allows them to deduct the cost of their properties over time. This means that they can offset their rental income with these deductions, significantly lowering their taxable income. It's a powerful tool that can turn a profitable property into a tax-neutral or even tax-saving investment. Tech entrepreneurs often use stock options to defer taxes. Stock options are a form of compensation that allows employees and founders to buy shares at a fixed price in the future, often at a discount. They only pay taxes when they sell their shares, potentially at a lower tax rate. By holding on to their shares for a longer period, they can benefit from long-term capital gains tax rates, which are typically lower than ordinary income tax rates. These are just two examples. The key takeaway? The wealthy use a combination of strategies to minimize their taxes. They work with skilled tax advisors and financial planners to navigate the tax code and find every possible deduction and credit. The wealthy use a combination of strategies to minimize their taxes. This includes everything from charitable donations to offshore accounts, and even setting up trusts and foundations. Each strategy is carefully chosen to fit their unique financial situation and goals, and they do it all within the bounds of the law. By leveraging the tax code to their advantage, the wealthy can significantly reduce their tax liabilities, allowing them to preserve and grow their wealth over time. Understanding these strategies can provide valuable insights for anyone looking to optimize their own tax situation. Section 6. Leveling the playing field. Tax strategies for everyone. You don't need to be wealthy to use these strategies. Everyone can benefit from tax planning. Start by educating yourself. Learn about the deductions and credits you qualify for. Consider hiring a tax professional. A good accountant can save you more in taxes than they cost. They can also help you develop a long-term tax plan. Investing wisely can also reduce your tax burden. Tax-advantaged accounts, like 401ks and IRAs, allow your money to grow tax-deferred. Section 7. Investing for tax advantages, making your money work for you. Speaking of investing, certain investments offer tax advantages. Municipal bonds, for example, are often tax-free. Real estate investments offer depreciation deductions. Consider investing in a Roth IRA. Contributions aren't tax-deductible, but withdrawals in retirement are tax-free. This can be a powerful tool for long-term tax planning. Remember, investing is a marathon, not a sprint. By making smart investment choices, you can reduce your tax burden and grow your wealth over time. Section 8. The importance of professional advice. Navigating the tax maze. Navigating the tax code can be daunting. Don't be afraid to seek professional help. A qualified tax advisor can identify tax-saving opportunities, help you develop a personalized tax plan, ensure you're following the latest tax laws, and represent you in case of an audit. Think of it as an investment in your financial well-being. A good tax advisor can save you money, reduce your stress, and help you achieve your financial goals. Section 9. Take control of your financial future. Understanding the tax system is crucial for financial success. By learning the rules of the game and utilizing legal strategies, you can reduce your tax burden and keep more of your hard-earned money. Remember, it's not about avoiding taxes altogether. It's about paying what you legally owe, no more, no less. So educate yourself, seek professional advice, and take control of your financial future.